So this month we have a potential big volatility event, the GBTC unlock. So that is the Grayscale Bitcoin Trust unlocking of shares. The investors in this are tied up for 6 months. After that 6-month period, they can then sell those shares. So in this video, I'm going to have a look at a few different opinions on this from industry leaders. Is this going to be bullish, bearish, or potentially neutral and a nothing burger? Let me know your opinions on this down below in the comment section. I'll be interested to hear what you guys think of this one. If you're new here, make sure you subscribe to the channel. Also check out my Patreon and join our private community. So the Cryptolark put out this tweet, and this is a poll he run. What do you think will happen with the coming unlock of 140,000 Bitcoin worth of Grayscale BTC shares later this month? By this, he means 140,000 GBTC shares. This isn't 140,000 Bitcoin becoming unlocked, and people are very undecided around this one. There was no common consensus. Around 32% say it's going to be bullish, around 30% bearish, 16% did not know what he's on about, and around 21% didn't really care, and they just continue to stack their sats. A few people having a go at him down here, saying that this is misinformation and a bit confusing, as he's not specified exactly what he means by this. But I see where this guy is coming from, because clearly it doesn't look like he's talking about 140,000 GBTC shares, but 140,000 Bitcoins. Anyway, we digress. What is GBTC, and is it currently open for business? Well, currently right now it is not. They say that Grayscale Bitcoin Private Trust placement is offered on a periodic basis throughout the year. Currently it is closed. So the investment objective behind this, as this is a close-ended fund, the GBTC shares should actually reflect and track the market price of Bitcoin. So this is a way for institutional investors and people who maybe find it hard to buy spot BTC for whatever reason. They can get exposure to the asset BTC by buying up GBTC. There is a minimum requirement of $50,000 in. There's also a hefty 2% annual fee. They have a whopping $21 billion of assets under management. This fund just buys Bitcoin. They've got 21 billions worth. That's roughly like 4% of the total supply. And then down here, secondary market trading. So following a 6-month holding period, shares are eligible to become unrestricted and resold on the public market. And in terms of redemption of these shares are not currently authorized. So you can't redeem these shares for actual physical Bitcoins. And so this is the confusing part. The GBTC unlock does not actually unlock any physical Bitcoins. So the major issue here is not around are Bitcoin being unlocked and potentially going to hit the market right now, but how have the people who have invested in this vehicle gone about hedging their bets, and will this in effect cause the price of Bitcoin to go down? Are they going to be shorting, for example? So this is what we're looking at today. Over on Decrypt, they kind of put a little TLDR for us. How does the GBTC work? Well, Grayscale Bitcoin Trust, they actually invite a private pool of very rich investors to go ahead and put money forward to buy up those huge amounts of Bitcoin. They were hoovering up Bitcoin the back end of 2020. Then Grayscale lists that fund on a public stock exchange, meaning that anyone can trade its shares. Shares in the fund track the price of BTC, but only roughly. They sometimes are trading at a premium above the price of Bitcoin, and sometimes at a discount, which is below the price of Bitcoin. So since late February, the premium actually went to a discount. And since then, there was some hefty discounts up to around 20%. Currently, we're sat around 9% discount versus the underlying BTC asset. So the discount or premium to NAV, which is the native asset value, is a percentage that calculates the amount that an exchange traded fund or closed end fund, which this is trading above or below its net asset value. This metric can then be a valuable metric to track how far away a security is from its true value. And this also speaks to institutional demand. When there's a huge premium, it means institutions are flocking to try and buy up GBTC to get that Bitcoin exposure. And when it's negative, the institutional demand clearly is not there. So at a rough 9% discount right now, it means that you're getting roughly $100 worth of Bitcoin exposure for the cost of $91. So whilst there's been a heavy discount, you're seeing institutional investors actually go ahead and buy GBTC shares. Cathie Wood bought the dip. Ark Invest purchases 1 million GBTC shares here, according to the report, but more on the discount rate and institutional demand later on. So Alex Mashinsky from Celsius has been calling the market pretty accurately, to be honest with you. I've been following his tweets, and he says this around the GBTC unlock. So thus far, we've had 2 capitulation selling events for Bitcoin over the last 2 months. The first was the retail FOMO that took us up to 65K, and then the big sell-off. Then we had $3 billion worth of flash selling over the previous weekend, which included miners and Chinese retail and some FUD selling. And we're about to have a third and last wave, as he says. So he says this third and final wave will be mostly because of the FOMO, around $20 billion worth of GBTC ARB institutional trade. So he says that hedge funds used leverage loans from Genesis Trading and others to buy Bitcoin in January and February that will become unlocked for the first time starting next week. He then goes on to say that at least $5 billion's worth will have to be unwound off GBTC, which may take the Bitcoin price back to those key 29K levels. But after this July sell-off, we should see smooth sailing for the rest of the year as we break a new all-time high on our way to 140 to 160K per Bitcoin. Let's all hope his crystal ball is correct for this part down here. Willy Woo did respond to this one. That's not how GBTC inventory works. It's like Hotel California, i.e. people come and they never leave. It can enter but never leave, apart from the 2% annualized fee, which is deducted regularly. Keep an eye on the GBTC premium for underlying demand. And he says that demand is climbing. And if we go back to this chart, it was at a negative 20% discount back in May, and it has been creeping its way back up towards a neutral range of 0%. In response to the Mashinsky tweet, this guy here, Jeff Dorman, posted an article where he debunks some of the bear thesis right now. So within this article, which I will leave down below, debunking the bear thesis number 9, Grayscale unlocks are going to crush the market. He says, no, when you buy GBTC from Grayscale, you're subject to a 6-month lockup, and the biggest unlocks are happening over the next 2 months, which could lead to heavy selling of GBTC on the open market, but this has no effect on Bitcoin itself. The Bitcoin in the trust does not trade. Only the shares, and thus GBTC will likely continue to trade at a steep discount to the net asset value. Moreover, since most buyers of GBTC were doing it for the ARB back when GBTC was trading at a premium to the NAV, they were also shorting Bitcoin. So a hedge fund in this situation would A, borrow some Bitcoin, then contribute Bitcoin in kind to create GBTC shares, and then finally short futures or spot to hedge out directional risk. Thus, as the funds unwind for this trade, it could actually put buy pressure on Bitcoin, not sell pressure, as those who sell GBTC will have to buy back Bitcoin to cover the short leg of this trade. So interesting to see a counter argument to that. Then we have Lyn Alden weighing in on this. She is another cracking investor that I'd like to follow. She says that the GBTC lockup period opening up just means folks can sell their GBTC shares that they bought at NAV, but this doesn't sell Bitcoin, as the fund is not actually allowed to sell Bitcoin except to pay for expenses. However, the premium going negative back in February did actually stop GBTC buying completely, which is the real big deal here. So she points out that that discount rate means that and Grayscale are no longer buying any more Bitcoin. She points out on this chart that Grayscale were the biggest buyer in Q2, but when the premium over NAV turned into a discount in late February, the neutral arbitrage trade dried up and Grayscale stopped buying. It now has to gradually sell Bitcoin to fund their expenses. Thus, the biggest buyer has now vanished, and a lot of that was the neutral arbitrage trade. You can see the blue line up here, which is the amount of BTC held by them, was slowly in decline since the end of February. And when the biggest buyer on the market, remember they were actually buying up more Bitcoin than was being mined for a long time, you see the price decline. So it looks like there was just a load of different factors that have all contributed around the same time to the Bitcoin price slowdown. within a podcast I was listening to of Lyn's, she did not cite the GBTC unlock as a major event, but was more concerned around the ESG, the environmental concerns, and also any regulatory changes that may be enforced coming up. So why has this discount occurred for Grayscale? Well, ETFs have been cited, so there's a Canadian ETF, for example, but other ways to access Bitcoin made GBTC less unique. Hence, Grayscale have no longer been buying up Bitcoin like it's going out of fashion. So that premium went away and the neutral arb trade went away with it. And we have other companies that are essentially vehicles for getting Bitcoin exposure, the likes of Skybridge and MicroStrategy, to name just two. We also have Dylan here from Bitcoin Magazine chiming in with this. Whilst the price of Bitcoin was on its way up, with the premium, Grayscale was hoovering up Bitcoin whilst retail investors were bidding up the price of GBTC shares on the secondary market. All of those shares that are now trading at a discount to NAV have most definitely siphoned demand for spot Bitcoin for the time being. So over the last 7 weeks, the equivalent of 11,000 Bitcoin worth of GBTC shares have been unlocked. Undoubtedly, some of these have been sold onto the market. And as an institutional allocator, if you look for exposure to Bitcoin right now, would you just buy spot Bitcoin, or do you go for shares of GBTC instead? Because they're trading at sometimes up to 10 to 20% discounts, currently 9% today. Well, it's going to be a no-brainer. They're going to start allocating their capital to GBTC rather than buying spot Bitcoin. So as long as these shares continue to trade at a discount compared to the net asset value, that of Bitcoin, lots of Bitcoin demand will go towards GBTC, which won't be reflected in the Bitcoin price. And then we have Heiko here, who runs Monoveil, the NFT project, saying that it could be pure coincidence or it could be psyops, but I tend to believe that GBTC unlocks are at least contributing factor to Bitcoin price action. And I think that Barry Silbert knows this. He tweeted out, this week is going to be dicey around a point of GBTC unlocks. We can see the unlock period here in red, and when there was an unlock, price did trend downwards. Green period, there was no unlocks and we went up. Red period, an unlock of 827 Bitcoins worth, we went down. Another big unlock of 1,803, we went down. Then we have an unlock of around 1,800 and we actually did move kind of sideways during that period. And then we're in this period here where there are no unlocks until the middle of July. And we have been ironically trading upwards, but there is a big unlock coming up just next week. So on BuyBT, you can see the Grayscale Bitcoin Trust unlocks. The first one on the 12th of July, around 2,000 Bitcoins worth. And then we have another 2,000 worth on the 13th, on the 14th, around 5,000 worth. And then a big unlock on the 17th of July. So this might be a date to look for that volatility in the market. And then a couple of days later, we have around 8,000 to 9,000 on the 19th of July. So a big period of expected volatility around here. Clearly, from looking at the charts, it does appear generally there is a downtrend during these unlocks. But the good news is that after this period, if we look beyond August, there are no further unlocks. So this could spell a nice bullish Q3, Q4 for Bitcoin as we get past another hurdle, another roadblock in the way. So what is the conclusion here? Well, GBTC is likely to have a continued sell-off. A load of it is becoming unlocked. It's going to hit secondary markets. People are going to sell. This should widen the discount. So I think institutions, high net worth individuals will go to secondary markets and scoop up highly discounted GBTC shares. And in effect, this means there will be less buy demand for Bitcoin on spot markets. And if Mashinsky is correct here and hedge funds used leveraged loans from Genesis Trading and others to buy Bitcoin in January and February, and that becomes unlocked the first time, then there may be some downward sell pressure as well. So we may revisit these low 30 and even 29K levels. So I would be prepared for that. And that could be a third and final dip before we have a more bullish Q3 and Q4 and beyond. So preparing for this mentally and also in terms of your portfolio, that is something that I'm doing personally right now and thinking about how I'm going to allocate when that occurs and maybe if there's any trades I want to make. Let me know down below what your thoughts on this. We've seen some of the data and some key opinion leaders as well, but what have you got to say on this subject matter? If you enjoyed the content today, make sure you subscribe to the channel. Also check out my Patreon to support the channel further. I'll see you in the next one. Thanks and goodbye.